This is the 254th time you have come before us to share your wisdom, or at least what you think.
Yeah, let's not jump to wisdom. Let's see what we can do here. Actually, the last time I tried this subject, Mark,
Yes, I remember. It was a week. It was 5 days before Russia invaded. Yes.
so I'm trying to hope not to whiff as badly this time. We'll see what happens.
It was a total whiff, but it's okay.
So want to talk about the Russian economy in a wartime, but before I do it, I thought
You know
it's
what?
interesting.
I should stop sharing my screen. You already. Oh, good. You took over my screen. Sorry, Stephen. Carry on.
In addition to the unusual nature of Jack Ma coming out and showing himself again, I think the meeting in Riyadh between the three leading fossil fuel producers in the world, talking about the future of Ukraine, is an interesting dynamic as well. So as you said, Mark, there's a lot of unusual politics. I really want to try and focus a little bit more on the Russian war economy. Because it has some implications for the future that I think go beyond just Russia and Ukraine, but China's kept a very close eye on it. So despite initial predictions, the Russian economy has done quite well in the face of the economic sanctions, which have failed to cripple the economy as expected. I think it's adapted through some very thoughtful government spending, some trade adjustments supported by other autocratic nations, and an increase in domestic production that was forced on them because of the sanctions and because of how the West's playing out. But all this is setting up some vulnerabilities that both existed before the war, but now will be even more challenging, I think, going forward. So we'll take a look and see what lies ahead for Russia. But clearly, the just around $2.1 trillion economy out of a $110 trillion economy has done better than people would have anticipated coming out of the sanctions being imposed after the initial invasion. But I think the question is it sustainable? And these are the reported numbers to the IMF, which are reported by the government. I think the future numbers, this is in national currency. If you're looking at a drop off from the around 4% growth to under 2% growth or under 1.5% growth out over the next couple of years, this is going to be a very tougher outlook than the last couple of years have been. And I think their government and I think their finance ministers have done an exceptional job with the cards they've been dealt. But I think there are real challenges ahead that are coming.
Stephen, what's I'll look this up. I'm curious what the projected price of oil is during this period, because there is a.
Yeah, it's a big part of it. We'll actually get to that in a minute. I think I don't know what the forward forecast is on oil market.
I'll look it up.
Andy probably has that off the top of his head. But I just think they're in a spot where if you're running at below 2% growth on an economy like this, with the spending that they've had and the distortions that have gone in the economy, I think it's going to be a real problem. And they've gotten to this point the last couple of years with defense spending, spending on the war-related items over 6% of GDP. Defense spending is exceeding social spending. That's a very difficult dynamic to have for any extended period of time. So I think when you step back and look at it, it's after a contraction that was less than people thought. You've had some positive growth. This year I think will continue to get tougher. I think while you have all-time low unemployment, real wage growth has been going on, and inflation, I think they're calling it stable. I would say it's stable but quite high, and I think that's going to be a challenge that's going to come back to roost. I think what you've seen is excessive state spending, the shift that they were able to make, supported by China in particular, has helped offset some of the problems. Their ability to beat the sanctions has been a big part of it as well. But I think there's been a lot of substitution going on that has supported consumption investment, but only in the short term. I think you're going to get an overheated economy that's going to have some significant problems that are creating much bigger long-term vulnerabilities that puts Putin in a bit of a box as to how does he get out of the wars and move back to a different kind of economy. So you have inflation that the war is feeding, which is then feeding high interest rates, which is limiting productivity and investments. And you also have demographic issues. So there's a number of issues longer term that we'll touch on a little bit. But Mark, you touched on oil, and oil has been the driver for them to get through this process because they were able to shift where it was going, where they were sending it to partners like China, Turkey, and India, people in the Middle East and to Africa, away from Europe, primarily in the UK. And I think that shift has been a big help for them. But I think over time, this is a vulnerability that is real. I think that the ability for Russia to invest in their infrastructure the way they need to will be hamstrung. So I think they've been very clever about how they've navigated so far, but I think the problems lie ahead. And I think this is unsustainable. I think most of the projections for oil prices will be very dependent on how the US and the Saudis want to play this. I don't think Trump's drilling is going to lower prices as much as he thinks, because I don't think the US oil companies are going to be as aggressive just because Trump says they can drill when they're focused more on productivity and return of shareholder value right now. But the war's changed their economy quite a bit. Over 1,200 foreign countries have left either partially or suspended operations, or either fully left or suspended operations in Russia since the war started. This is according to the Kyiv School of Economics and the Yale's Chief Executive Leadership Institute. 1,028 of those firms have left completely. That's actually shifted foreign companies away and moved to Russian companies, picking up some of the benefits of that. But the industries most affected have been autos, finance, and insurance. When a company has been, a foreign firm is being suggested that they sell and leave, they need the Kremlin's approval, and they face a discount of about 60% of the market valuation, and then there's a tax that goes on it. So this is creating an opportunity for the domestic companies, but I don't think it's one that's necessarily sustainable. And I've heard from one gentleman who was being suggested to sell his business that at the time, this was 6 months ago, the government told him they would take, he can get 25 cents on the dollar in a friendly sale, or 5 cents on the dollar if they just took it. So I think this is what we're looking at for business. It's some positives going on there. And I'm not knocking the Russian companies, but this is a very distorted economy right now. And those distortions are flowing through to inflation. And these are the levels that I think Russia would hope it would be. I think the actual reported numbers are much higher. And I think that the real inflation that is being felt by the population is on a lot of the goods is double what they're seeing here. So I don't think it's realistic for Russia to get to 4% inflation anytime soon. I think they're going to be struggling with much higher inflation for an extended period. And part of the reason is you have a whole bunch of issues driving up Russian wages. And I think this one of them is that their unemployment rate is at an all-time record low at 2.7%. But most central bankers would believe that the neutral rate or the neutral unemployment rate that's not inflationary or deflationary would be around 4%. So they're well below that level. And then you add to it the war and other issues that are distorting the wage issues and distorting the labor markets. It's you're getting higher wages for military service, but if you're a business competing with the military, you have to push up your wages too. So this is actually leading to wage inflation that's been helpful. But when you have 20% inflation and your wages are going up, 5%, you're still in a bad spot there. So I think you have this this issue going on, that you have bad demographics. You have about 30,000 people needing to be brought into the war effort every month. And that's actually creating supply shortages, which is part of the reason that wages are going up. I don't think this is sustainable, but this is fairly common wartime economics. But look at the interest rate that's exists out there today. And even with this, there's still pretty strong inflationary pressures that exist. And therefore, I don't think that Russia will be able to deal with this, because it's going to be hard for real wages to keep up with 20% inflation rates. That's going to create more social strains. And this is the real dilemma for Putin is he's been able to keep the population a little bit happy so far, but that can't last when you have the financial strains that are existing. Mothers are losing children to the war, not coming home. The whole situation is putting themselves in a pretty difficult spot. And this is actually one of the biggest challenges for Russia is while they've done well, productivity is lagging. And with these kind of productivity numbers, it's going to be very difficult for them to offset the inflationary pressures that exist. And I think that you're having rising inequality, which is another pressure point on the system. So when I step back and look at the long-term risk, you've actually created some massive economic imbalances with state spending and authoritarian practices that are actually going to overheat the economy and create inflation that they won't be able to beat later on. And this kind of is part of the box that the war has put Putin in. But ending the war is not going to be a good thing for him either. From his seat, I think you have these labor shortages that will persist. That's going to continue to drive up wages and create these imbalances. It's also creating distortions in which industries and companies are doing well and what it means for the post-World War II, post-war setup. You have capital being pushed on certain sectors away from other areas that is helpful in some areas, creating new industries like the drone industry is really taking off, but it's actually bankrupting other areas as well. And so in general, you have a big distortion in the economy that will not be able to be sustained. As the government cuts spending, they can't cut spending as long as the war continues. The war's sapping the labor force, fueling inflation and frustrating the public. And the high interest rates required to fight inflation is stifling investment and productivity and distorting the whole economy. So you're setting up for a very difficult challenge near term and ahead. And I think when you think about the assets that have been right now confiscated by the West and the rebuild that has to go on and how all this plays out, way above my pay grade. I'm not sure how this is going to shake out, but from our seat, I think it's going to put some significant pressure on Europe, significant pressure on the Russian economy, and will make the asset grab pretty important. And that's why you're seeing Trump pushing for rare earths and other things. The security demands that are going to go around the settlement of negotiations is going to be quite fascinating to see what's the give up is and how Europe plays a role in this is all up for grabs right now. So I think we're being overwhelmed by news flow. And that is part of the Trump agenda, is to put so much things in play at once that it makes it overwhelming for everyone on the other side to deal with. But can we deal with it from the US side is one of the issues. Similar to the last couple of years, the question is, does the ideological push that is backing this agenda go too far, and does it alienate too many people that has too much pushback, both domestically and from foreigners? I think we in the US continue to benefit from the near-term strengths that we have, but the leading stock market in the world since Trump election has been Germany, even though they've lost almost 250,000 manufacturing jobs. So the dilemma that you're seeing in Germany and China's market has done pretty well since DeepSeek announcements. So you have these struggling economies that are doing well from an investment perspective, while people are starting to rotate away from the US to go there. I think you have to be careful making that shift. If you're in it for a trade, great. If you think there's a long-term investment opportunity, I think the problems that exist there will be with us for several years. So watch the head fake there. I think overall we are set up for inflationary pressures, putting a lot of strain on governments around the world. And as Trump is pressuring Europe to step up their support for Ukraine and a settlement, you're seeing the pushback of how many people they'll put on the ground, what spending they're going to have. You saw the head of NATO suggesting that the NATO spending is way below the levels it should be, and it needs to be much higher than the 2% target and probably higher than the 3% that a lot of countries are discussing right now. So I think that's going to put more strains on these governments, and there's just not enough dollars to deal with all the problems. So hard decisions are going to have to be made, and they're going to be very uncomfortable trade-offs that we're going to have to deal with. From an investment perspective, we're going to have to be a lot more nimble, Mark. So I'm going to stop there and open it up for the real Russian experts on the call to weigh in.
Well, Stephanie's an expert in something. I'm not sure Russia, but she can weigh in.
You're far too kind. But no, I think I'm just curious because I've been having a lot of conversations mostly with a lot of funds here in the UK and US where capital is just massively leaving UK, but some of it's starting to circle back and return, which is interesting, especially on the debt side, which is nice to see. But there's a lot of infrastructure issue here in the UK, which doesn't attract capital. So kind of thinking of what's even just domestically happening here, what are you seeing kind of, and is anybody investing in Russia? Where's the capital? Is there any capital going toward? I mean, it's just literally, they're just trying to manage a bad situation for as long as they can. I would guess relying on natural resources, but
they're getting support from other autocratic countries like China. Part of what's driving them is they do have a massive infrastructure project that's trying to bridge from Russia's eastern portion to the west to China so that they can get better trade routes there. That'll benefit China more so than I believe it'll benefit Russia.
But predicated on natural resources, like nothing. I mean, because we're talking about, I mean, innovations leaving the UK, tech perspective is leaving the UK, talent perspective. So, I mean, they've got it. I mean, your slide kind of summarized it perfect. They're suffering on kind of all of these levels. Not having that in place now is going to compound like 5+, 10+ years down the road. So there is an implode coming. It's just a question of when.
That's my belief as well. Yes, they have too many problems that peace will not solve for them, unfortunately. Yeah. And I think that's part of Putin's challenge.
Thanks.
So, Bill?
Yeah.
Adam and Gabe.
Right. Thanks, Stephen. It's such a conundrum as well to try to understand kind of where Russia's going. Kind of to that point, did you look at all at the components of GDP? Because I've seen some of the data out there that shows that government spending has been flatlined almost like for the last 20 years. But that just doesn't look right to me. And Adam's shaking his head.
Yeah.
Well, I'm also, Adam, there's a lot of off-balance sheet activity that's not getting known, and it's massive.
Yeah. Yes, that's true. And that's very difficult to really find. There's a guy by the name of Craig Kennedy. Actually, he was instrumental in developing the sanctions that we have now on the shadow fleet. And he authored a paper recently about that off-balance sheet financing. And it's really hard to find it. But yes, there is a question about that. I wanted to address Stephanie's question about who's investing in Russia today. Foreign direct investment has dropped to, I think it's early 90s. Maybe it has dropped to a low. And the investments that are going into Russia today are really Russian money that's going back. And the Chinese really are not.
Wait. You said it's going back. But Adam, it's not going out. You mean it's
Well,
it's
you've got almost 200 billion in capital exiting Russia annually. Okay,
Maybe, what are
but
your thoughts? Like, how is it exiting? Because in the last company I was in, we couldn't get the money out, so it was we just wrote it off basically.
it exits through oil exports.
Okay, yeah,
For
exactly.
example,
Yeah, okay.
yeah, and gas exports. For example, you've got a lot of money that is tied up in India right now that the Russian oil exporters, they can't repatriate because of Indian capital restrictions. So what the Indian government has done is they've put those in special nostro accounts that allows them to invest in the Indian stock market and in Indian businesses.
Yeah, so it's routed through kind of different either shell companies or routed through.
Exactly,
Yeah.
exactly.
okay. Let's
Yeah,
So
they're
let's
also
look at
doing they're also doing these swap agreements with different countries where they're
yes,
swapping services, and that doesn't show up in the capital flows. I don't believe it's not tracked as foreign direct investment flows. It's
that's
tracked as
right.
trade, some form of trade.
That's
A
right.
lot,
It's
a lot of
almost
Russian
it's almost
economy
like the
takes place offshore, like between contracts of offshore companies for what it's worth. So
Right.
Adam, I like Gator's new, and you asked like an average of 3 questions a time. So let's let Gator say.
Well, yeah, one thing I wanted to chime in, I think looking at the statistics alone probably doesn't give a good indication of how much activity is going on right now between Russia and China in the technology transfer space. There's a lot of stuff going on right now that I would, is almost kind of bartering of, either Russian technological expertise that the Chinese have wanted for a long time in return for access to different, manufacturing that is limited to them in the West to keep the war machine going, or a lot of increasing technological collaboration between Chinese companies and Russian companies and Russian scientists. Huawei had actually created a plan in 2019 already to think triple their R&D presence inside of Russia, and they've continued to pace with that even after the Russian invasion over the last several years. And there's a number of other examples of that, and there's I think quite a few examples that are not being publicized and not kind of not being put forward in ways that are that are obvious to the just sort of what you would find from the statistics released by, the Russian government or even put together by a lot of third-party observers. So that's one aspect I would underscore of what's going on. The dollar amount isn't necessarily a good reflection of, what products are moving into Russia from China and what technology is going back and forth, right?
Fair enough. I know you've been investing in dual use, and we'll hear you
Yeah,
talk.
as it's an area, and all, my wife is from mainland China. Like I know, for better or worse, intersect.
There.
Yeah.
Andy, and then Jeff, and then back to you, Adam.
Just quick, two fill in the blank things. Stephen, your productivity page,
Yep.
that went down, and then all the forward-looking numbers. So Russia now has the biggest military spending as a percent of GDP. These are big economic studies have been done a long time. Military spending as an economic multiplier in the economy is one of the lowest ways to stimulate growth with government spending. So the point being is that there's no reason to believe that's going to improve. And the drilling part of the oil is opening up Arctic and offshore and some other things. We're talking a decade before you see any oil, even if somebody does throw the money in. That's about it.
Fair enough. Jeff?
hey, I don't consider myself a current Russia expert by any means, but I did, Mark does live there for about a decade investing and starting businesses. But I guess one comment and one question. My comment being, with all the numbers, which I think are super helpful and informative, like one thing I've learned is don't underestimate the Russian population's capacity to absorb hardship.
Yeah.
And, I mean, and all these economic theories break down a little bit when applied to Russia, I find.
Or the Ukrainians, for that matter.
Or the Ukrainians, for that matter. I mean, which is really, should properly be framed more as a civil war than many other things. But I'm curious, just from my Russian friends and what I've heard anecdotally, I hear that a big part of how the sanctions beating. I mean, besides obviously India and China. I mean, you just look at your oil thing. China filled that gap immediately. But my understanding is basically crypto has been the greatest gift for the Russian economy because they can just bypass sanctions via crypto. I'm curious if anybody has any sort of more material thoughts or experience on that.
Yep. Yevgeny?
Yeah, I'm in the crypto markets day in, day out, and there is hundreds of billions of dollars of Chinese and Russian money in that flow in and out all day long. In fact, that's one of the big points that people miss when they think, oh, people still need dollars. You don't need dollars when you have instant settlement, frankly speaking.
Right.
And the majority of capital flows, there was a question earlier, like how do you get money out? Well, you get it in 2 seconds with crypto out of Russia. So if you're in the crypto markets, you have no capital restrictions whatsoever. That's one aspect. And the other one is there is actually, my wife is Russian, so I kind of hear a lot of the Main Street comments that Russia invested 18% of GDP in 2024 in startups. That there isn't a country in the world that has done that. And these startups, as much as they're probably allocated to oligarchs and oligarchs' wives, are basically replacing all the Chanel goods and luxury goods that they used to enjoy. And now that for every luxury good that you can imagine, there is a Russian alternative made in Russia. And that is some of the positive that has come out of the sanctions, that people have become actually quite patriotic. And in fact, they kind of beat us here in America because of the sanctions. They started to make Russia great again in 2022.
Yeah. And the
They've done that for
unintended
several
consequence of
countries.
sanctions has been, it's done what the Russian government couldn't do on its own for, 30
Correct.
years. But let's
So-
create a value-add economy instead of just export raw materials.
That's useful. Paul, you had a question or comment?
Yep. I just wanted to hear from, I guess, everyone on the call we just had Rubio meet with Foreign Minister Lavrov, and they're kind of planning out, where the world is going to be. This is like Yalta, and they're not including Europe in the discussion, but I assume at some point they're going to normalize economic relations, and you're not going to need to use crypto. But if anyone has any thoughts in terms of like how far and how fast this is going to happen, obviously the war is still going on. Zelensky hasn't been invited to this meeting, but like the U.S. is kind of basically stressing the point that they want the war to end. So how fast could this happen, and then what are what pieces need to happen to actually get the sanctions to end, and then like Russia's off the SWIFT system. Russia is there's so many kind of issues that have happened in the last 3 years. Like, does anyone have any thoughts on the timing of that?
Personally, I don't expect peace to break out anytime soon in any of the conflict areas. Hamlet just joined.
Yeah, Hamlet.
Point of view.
You took the words right out of my mouth. Yeah, global peace is not breaking out anytime soon. I think you may see a cease to the kinetic conflict between us and Russia, but in some fashion or another, you're going to see the formation of Eastern Ukraine, Western Ukraine, no different than when you saw at the end of the Second World War. And I think the conflict is going to turn from kinetic to asymmetric, irregular, and basically a second Cold War. Putin would then use any kind of land that he's gobbled up in Eastern Ukraine He's not going to relinquish as a means to destabilize Zelensky and put his own puppet in place and continue that same playbook towards the West. And I think the West, Europe, and the U.S.'s effort will be to restrain and control Putin, but also weaken this lack of a better word, alliance you're seeing formed between China, Iran, and Russia. We are falling into a paradigm where you're going to have two conflicting economies, two conflicting supply chains, two conflicting powers, no different than we had in the first Cold War. Only difference is the Soviet bloc was rather frail and had a pretty small balance sheet. The China bloc, the China-led bloc that's going to include Putin and Iran, is going to have a much deeper balance sheet. So this conflict is about to change. But yeah, global peace is not breaking out anytime soon.
Evgeny, you still have a comment or question, or that a legacy hand?
I guess that's the legacy hand, but I did want to add a few more points here that I also changing drastically. I'm seeing a significant amount of tokenizations coming from that corner of the world as well, which effectively are moving finance on a completely parallel rails from traditional banking, and I don't think any of that is coming back, simply because a tokenization is 40% cheaper than debt financing or IPO in the public markets. And as a result of that, the war has basically unleashed the tokenization of real economy much quicker than anybody has anticipated. And obviously, with Trump support for crypto, we'll see the US also massively support that effort too, which I think will try to pull that flow into the dollar to some extent. But ultimately, we'll have this is unleashing a global change in financial markets that will basically be here to stay. We're not going back to the old ways, if you wish.
Okay. Michael Hammer?
So it's been interesting listening to the conversation. Personally, I think we're going to see a bigger split between Europe and the US in terms of Russia, Ukraine. I have a lot of friends in Estonia. They absolutely do not trust the Russians. Same with Lithuania. The Poles feel strongly. So
1 million people.
we live in interesting times. And I think that Trump, he said he admires Putin. He seems to be angling for spheres of influence, if you will. Right? So China gets their sphere of influence, Russia gets their sphere of influence, US gets their sphere of influence. And I don't know that everybody's going to go along with this. We live in interesting times.
Fair enough.
Hamlet, how does Europe respond to what Trump's request is for their participation? They've already given indications that they're not willing to put people on the ground unless the US is from some countries. How do you see that playing out?
I think potentially you see that forcing function continue to happen. I mean, Europe, for the most part, stepped up and woke up over the last several years and started spending more and more money on defense tech and defense innovation and defense in general. I think that trend is going to continue. I don't think, this is purely my speculation, my guess, I don't think Trump's going to abandon Europe, but I think he's going to use that threat to force them to take more accountability and a greater role. That's why I think you're seeing Poland really emerge as kind of one of the leaders in lack of a better word, the resistance to Russia, because they're sitting on the doorstep and they know that if Ukraine falls, what I mean by falls, it means if Ukraine does get divided and Putin hangs on to the turf he currently has, they're essentially potentially next, the next target for Vlad. So I think the Eastern European countries that are now part of NATO along with Poland. I think you're going to see them form that initial line of resistance. And I think begrudgingly, the rest of Central and Western Europe is gonna come along. I think the Brits have woken up to realize the threat that's there, and I think you're starting to see parts of traditional Western Europe wake up and realize that the post World War II era of quote unquote globalization and global peace is over, and we are heading towards a bifurcated world. You still have people there that resist that, but I mean, you also have people here in the U.S. that still continue to call China our near peer competitors. That's not the case. We are in a conflict scenario, and the sooner we realize it, the sooner we can adjust to it.
It's shocking the lack of military readiness of leading countries in Europe right now.
Yeah.
I was reading today that Germany before the war had, in terms of brigade strength, was 65% of where they should be, and now they're at 50. So they've actually gone the other way in terms of strengthening their brigade portion of their military. And we know in other areas their helicopters and naval areas are weak too, and they're not alone in Europe because of the underinvestment. So very tough.
I want to let Giovanni go next because you haven't spoken yet. Go ahead, Giovanni.
I've done my military service in Italy, and I was a military attaché to the Italian ambassador to the United Nations at the Security Council. So I would say that the ebbs and flows of military influence within Europe, because sort of England is not part of the European Union, but seems incredibly engaged in the threat to Europe, because Scandinavia is perceived to be relatively passive relative to the rest of Europe. The fact that Sweden and I can't remember which other country has decided to join NATO has significantly engaged in the potential threat to Russia. It has caused those sort of bigger, wealthier nations, France, Germany, Italy, who have buffer states between themselves and Russia, that were resting on their laurels. They're getting woken up, and I think that Europe will engage significantly into to the threat of Russia, and I think it will end up with probably, I mean, success begets success. And, in the early part of this conflict, Russia seems to have succeeded. But the mere fact that Ukraine has not crumbled within 3 days, 3 weeks, 3 months, or even 3 years to Russia, it shows that if you do put up a fight against a nation that is perceived to be much stronger than you, you can in fact win. So I think that much the same way as John Fitzgerald Kennedy wrote that book When Europe Slept and so on and so forth, I would say that Europe is waking up, is engaging, and within very short order, even though Europe doesn't have strong brigade strengths, its unit capabilities are incredible, much the same way as Ukraine's unit capabilities have been incredible. And if you see the French Foreign Legion, if you see the Italian Alpini, if you see the German sort of technical divisions of armaments and Air Force engaging, this is not a threat to Europe. And I will just refer to Finland's minister who spoke at the Munich Security Conference yesterday, how incredibly nonchalant and self-assured he was. And he was educated in America. He went to college in South Carolina. So Russia doesn't know it yet. I would say the rest of the world doesn't know it yet, but Europe is waking up, and if it wakes up and unifies, which has been doing ever since the Second World War, Europe will be a formidable strength, and will probably, if Europe engages, probably push Russia out of Ukraine and take over Crimea and completely solidify the Black Sea to Europe and Ukraine. That's my sentiment.
Well, every beginning of every year you have a prediction. You won the prediction with 2020 with COVID. So we'll see where this one goes.
I would just ask why they waited.
I think because they could, because they were enabled by the US.
I would say it's the unintended consequences of the European Union, where there is no single leader. It's very bureaucratic. It's very sort of, let's discuss. There is no room for leadership. They don't want one nation to be so powerful that other countries follow or feel the wrath. It is the unintended consequence of the government structure that they have created.
Fair enough. Okay, then Gator, then back to Michael.
Well, wanted
More
to,
piece. Go ahead.
yeah, wanted to pick up on something that Michael indicated, but also on a lot of things that Giovanni and Hamlet touched on. Michael indicated, the countries that are right on the front line after Ukraine are the Baltic states and Finland, and we're actually investors in some companies they're working with the Estonian military right now, and otherwise engaged with people in those markets. And I think to underscore what Giovanni was saying, if you're in the Baltic states or you're in Finland, you're familiar with being in a situation where the Russians come for you and nobody shows up to help you. And so, they're very cognizant that they have to take responsibility right now into their own hands. So that's playing out. But I think, in turn, that is going to be a bit of a domino that spills over into, next Poland and then into the rest of Western Europe. And the capabilities on the technological side are very, very strong, as Giovanni said, even in maybe in some ways even better in countries like Finland and Estonia, where they've had to do more with less for a longer time when it comes to investing in edge technologies.
Yeah, I don't doubt the capabilities. I doubt the balance sheets right now of these countries to put the spending and still meet all their needs domestically that they have with all the problems that are going on. I think that's where the pushback comes for how far and how fast these guys can shift money to the military versus their domestic needs. I think that's been the struggle for a lot of these governments right now, and that's why you have such political strife going on in many of these countries as well. So the war is just one of the elements that they're fighting for their spending needs. And I think that distraction is a problem. So I don't doubt the capabilities. I just wonder, can they get there fast enough? And do they have the resources to get there if they had the leadership?
Well,
To your point, Stephen, they don't have the capacity to manufacture all of the war equipment. And they don't have the political will to do it either. Russia is on a war footing, and the Europeans have been sleeping, as the United States, by the way, over that. And it has been the East Europeans that have been screaming since 2010 about the Russian threat. Just a commentary.
Any other voices? Questions?
Yeah, I do. Mark, can you hear me?
Yep.
Steve Kasanovich. I previously introduced myself while muted, so I apologize. I'm interested where we seem to be hearing a lot about potential global impact in Russia. I think it's very difficult for the average investor to invest in Russia outside of an ETF. But what we're focusing on are alternatives and how to take advantage of global macro. Specifically, currencies are getting very hot because of all the impacts of tariffs. Just want to know if anybody's interested in investing and how they're doing it.
But I know you're new to this. That's a very soft way of selling, but just we don't allow selling like that. But teaching, right? If you had a point on currencies.
Well, I do. I think that the point is being on that because didn't even mention anything. But anyhow, but the point is that currencies have gotten very hot, and how that they're fluctuating around because of all these different impacts that we're talking about. And
Can you give an example of a major fluctuation?
yeah, not
Dollar
specifically,
yen.
but I'll just say from
Right.
what's that?
Dollar yen is 10% down.
Yeah, and then there's been other ones as Trump has either made a comment about Canadian tariffs and or Mexican, those fluctuated wildly, and that there's been a percent of opportunity. There's sort of a ton of exposure. So it is happening, and I think that the impacts when we talk about East-West oil supply, that you've got an Eastern European economy, Western European economy, and depending upon whose oil they're using. I mean, it's very fragmented and very divisional. So I think that there's going to be a lot of opportunities around those products, whether it be commodities and or currencies. That's just my 2 cents, and interested to see how you guys, as a outside of my realm, how you look at potentially taking advantage of those movements and fluctuations.
Anyone?
I'll take that because I've actually been trading currencies for 26 years myself, and yeah, you're spot on that. We've had a 16-year complete flatline in currencies since 2008, and really this is the first time currencies have started moving and in the last couple of months. So yeah, dollar yen is down 10%. Mexican peso swung about 10% at the threat of tariffs, literally in one day, and went back to where it started. And also we have massive divergent interest rate differentials. Europe has been basically on a 2% interest rate differential with the US. We saw Russian interest rate differentials at Russian interest rates at 20%. China has dropped their rates to 1.6% as well. So with such a wild and divergent interest rate differentials, actually the currencies have not responded to those interest rate differentials, which means that we're basically damming water at the moment, and that dam is going to burst at some point this year. And just to add to all of that, the US has to issue 9.7 trillion treasury bills in the next 3 months to just replace expiring maturities. So we will have massive macro movements in the next 3 months, just guaranteed by the flows that we're seeing out there.
Shouldn't that strengthen the dollar though? Because you're going to have such high demand, we're going to have the yields not go down at the very least.
Not necessarily, because the opposing forces that are working against is that majority of the treasury bills are not being bought overseas. It may strengthen the dollar against the euro because Western Europe is the only place that's buying treasuries at the moment. Nobody else is. China has reduced their treasury holdings from 4.5 trillion to probably 500 billion at the moment. So they can literally write off their treasury holdings any day of the week. Same story with Russia, obviously. They had almost $1 trillion in treasuries and they don't own any at the moment. So the only currency that may get impacted from the treasury is the euro basically dropping below parity. And that's going to happen anyways because Europe just doesn't have an economy anymore. I don't know if you guys have seen how Europe has suffered in 2024, but German economy has basically been in depression. Obviously, they're lying about their statistics, but they've seen easily 25% reduction in industrial output.
Yeah, they lost 250,000 manufacturing jobs, which typically have a 7 multiplier on them. So that's
precisely
big problem.
right.
Stephen, is that right about the China holdings of treasuries all the way down to $500 billion? Or
I think they're about 800, 700 billion now. I don't think they got up to 4.5 trillion either, but it doesn't matter. They've been selling off steadily, but I think they've kind of slowed that down lately because the
How
yields
about
have
all
come.
this gold, physical gold being transferred into the US? What's up with that?
That's gold moving from Europe back to the US because people just don't trust Europe for that. Actually, if you look at the gold that's in the HSBC vault on 40th Street, it is overflowing. And JP Morgan, 18 years ago, didn't even have a gold business. And now they have doubled the HSBC business in New York. So there's a lot of gold that has moved to the US simply because of safe holding. You know, people are afraid in Europe that their gold might disappear as governments start to fold. And that's a real present danger for Europe. You know, if somebody's going to blow up in this tariff wars, it's going to be Western Europe. Because they're way more leveraged than the US, and they have no economy at the moment, and they're paying 10 times more for energy than they were 3 years ago. In Germany, the electricity costs are literally 10 times higher than 3 years ago, even with government subsidies. And by the way, that's with government subsidies. So I don't know how you can build an economy with such hyperinflation.
Anyone else? Anyone in Europe want to take a counter view?
Actually, I wanted to add one more thing on, regarding Giovanni. I'm originally Bulgarian, so I have a view on the Eastern European front. The majority of the screaming and analysis that you see coming out of Eastern Europe are all from open society type organizations funded by Soros. So they're all basically drinking the same Kool-Aid. They're making predictions and begging for US aid funding with those predictions. So part of the reason you see such a concerted effort out of all of Eastern Europe, with exception of Hungary, is because all of these organizations were funded by the same person and on the same payroll from US aid. Practically speaking, the Russian threat in Eastern Europe just never has existed. Even during the Soviet times, which I lived under, Eastern Europe lived better than the Soviet. The Russians were sending so much resources into Eastern Europe to keep it happier than its own population. So I don't think anybody in Eastern Europe realistically thinks Russia will invade them, because what? Russia needs more potato land? No. Bullshit, right? Russia doesn't need more frozen tundra, if you wish, in Estonia or in and by the way, these are 1 million countries, so nobody in Russia cares about them, if you wish. The only thing they do care about is not being shut out from world seas. So that's why I wouldn't be surprised if Putin actually even takes Odessa out. So they cut out completely the access to the Black Sea of Ukraine, and that's basically what he's done effectively. But and
Well,
that's not a really
in our style, we'd like to keep different opinions.
Sure, definitely.
Different opinions, but you've thrown a cornucopia of
oh yeah
things at us. Anybody want to?
So yeah, I'll jump in. And Evgeny, I'm going to disagree with you. In the early 80s, I was living and working in Turkey for a Swiss company. And I would bring Turkish engineers to Italy for training. And because we'd have a number of them, we'd actually drive because it wasn't that horrible of a drive. And they didn't want to go through Greece, so I'd have to get a special 36-hour transit visa to go through Bulgaria. And I wasn't allowed to leave the Tur highway. I could stay in a hotel on the highway, but I couldn't leave that highway transiting. And quite honestly, the living conditions were abysmal. And when I would cross the border, you could see all of the military installations. So to say that there was no threat from Russia, I'm going to absolutely disagree on that. But the point that I was waiting patiently to make, Mark, is, you know, people talk about the US guaranteeing if the Europeans put troops on the ground in Ukraine. Yeah, we see what the value of a US security guarantee is when we look at the Budapest Memorandum from 1994. Ukraine gave up its nuclear weapons, and it was what, the third largest nuclear power in the world at the time. And it gave up its nuclear weapons in exchange for security guarantees. And we've seen how well that worked out for them. So in today's world, who would plausibly believe a US security guarantee?
Other comments?
I have a question to everybody. I'd like to follow up with Evgeny offline because I really want to understand this sort of conspiracy that George Soros is some sort of freaking puppet. Because I can assure you that if the cabal were so powerful, Trump would not have won the presidential election, at least in 2016. So it just shows how impotent this supposed powerful cabal is. But in any case, I'm wondering if everybody could answer this for me. The fact that Trump is reneging on US security guarantee around the world, do you think that this will have a lasting impact beyond Trump's presidency? Or do you think that people think that this is but a blip during the Trump presidency and that after the Trump presidency, the world can count on America again, and that America will return to mean, to use financial terms, will return to its mean of sort of security guarantee and international norms? Do you think that that Trump has irrevocably broken America, or is this but a blip?
He's damaged it. It's not a blip.
I think the US was already on a path that we could no longer be the guarantor of world security of the oceans. It was already happening. Well, not from a political standpoint, but just from an economic and military standpoint. So maybe it'll change, but it's already happening.
The one thing I'd add to that is, at the end of the day, I mean, it generally seems to me Trump is a symptom of the underlying change in the populace, right? And those changes have occurred throughout the world, or at least throughout the liberal democratic world, where there's a rise in populism. So if that underlying fervor doesn't change, then nothing changes when a Trump presidency is done, right? Because that's effectively what's driving all the changes that we're seeing, is the underlying fervor that it created in the first place.
So many swirling ideas happening. Bill, I want to shift gears because we're touching the envelopes of politics a lot. Bill, this graph you put on energy costs versus solar wind, do I understand that the more solar you have, the higher cost of energy in your country?
That is correct. That is correct. So I think it should, the diseconomics, of it the way that it is right now has just been forcing overall energy costs, higher and higher and higher. The more green you are, the higher the energy costs, essentially.
What year is this?
That was I snipped that out of the Wall Street Journal just a couple months ago.
And do you think India is that low partly because of the discount they're getting on Russian oil?
I think that's a reasonable guess. India and China are the two largest oil importers from Russia, and I'll bow to Adam, etc. But I'll bet it's a sweet deal. That's for sure.
I'd just like to see a timeline dynamic, but okay. Samir? You're on mute.
Okay. Yeah. So to that point, the reason for I invest in both old energy and new energy, and I'm
You're muted somehow again.
positive correlation, which is a sort of counterintuitive, is a policy decision in those countries. So Denmark specifically places very high taxes and other costs on energy overall in an effort to drive efficiency. Whereas so India and China are in a very different geopolitical environment compared to other places. So it's not that solar and wind actually lead to higher costs as such. These are actually policies. So if you look at all of the countries that are sort of towards the top right, all of those countries basically have either very severe energy constraints otherwise, or have specific policy decisions that lead to very high electric prices in order to drive energy efficiency. So I wouldn't say that that solar and wind per se is a reason for higher energy costs.
How much of it do you think is the infrastructure isn't set up for the storage that will allow them to maximize that and keep the prices down, that we're wasting a lot of the renewable energy because of lack of storage?
And you're absolutely right, that those energy storage technologies are evolving. They're early in their maturity compared to oil and gas infrastructure, which we've had for a century. So once the cost of the energy storage drops, then you'll see that correlation change. Now, places like Denmark and the Netherlands, those are in high geographies where solar doesn't work very well. Wind does work to an extent, but you have factors like that. So to your point about energy storage costs, once those come down, then I think you'll see that come down overall. But even aside from the cost of production, it's still a policy decision, right, to have high energy costs just so that people are disincentivized from spending excess energy in those geographies.
It's a clash of ideology versus practical economics that we're running into here.
But evidently in those places, people still vote for those politicians, so they don't seem to have an issue with that. So.
And then if you look at places, if you look at Texas, which is one of the greenest states, energy states in America, its energy prices are extremely low when they're not in an energy crunch because they won't attach themselves to the rest of the US grid. But by and large, Texas energy costs, electrical costs, are the lowest in America. And Texas, I think, is the first, maybe if not second, most greenest state in America with regards to renewable energy. And then close to that is California, which has a lot of green energy because of solar and wind power, but because of the taxes that California puts on to its sort of fossil fuels, that's the divergence. So I would say that renewable energy being high prices is correlated, not causational.
Okay, Samir, you're back.
Yeah, just just to respond to Giovanni's point, when you look at Texas, the volatility of the electric prices is extremely high. It's literally the highest volatility of electric prices in the nation, for the reason, as you mentioned, that it's not connected to the rest of the national grid. So on the whole, yeah, they have lots of oil and gas, they have lots of solar, lots of wind. So when on good days, when it's not winter and things are falling over, energy prices are great. But suddenly when you get a winter freeze, the entire energy infrastructure falls over in Texas, and then suddenly your prices go up to like thousands of dollars a kilowatt, which has happened in the past. So there are some things they could do on that front to improve it.
Anything else? Adam?
Yeah, quick question for Samir and Giovanni. That energy cost in Texas when you go into winter, is that a function of energy storage as well? The solar and wind storage of energy? Or is it just the infrastructure?
Well,
that is part of the infrastructure, right?
It's primarily, it is not primarily, it is almost 90%. Other than that, the state does not abide by federal energy regulatory standards, whatever. So its energy infrastructure is not winterized to the same degree that the rest of the electrical grid is. So separate to that, it is because Texas cannot balance its electrical load with the rest of America when there are spikes, unusual spikes in energy demand. So when there is a particularly high heat wave or a particularly cold winter, which causes an abnormally high demand for electricity, because Texas is not connected to the rest, ERCOT is not connected to east and west grids. It can't balance its loads, and live by the sword, die by the sword, baby. That's capitalism, right? What do you want? Your money, or you want some comfort and heat?
Well,
Okay,
but
you want some
you,
heat?
you
Then
also
pay more
have
money.
you also have the other side in Texas, unlike almost every other place. You can build anything you want. You can build all the solar farms, all the wind farms. You can connect to whatever grid is there. And California, for a major project, has a 6-year backlog for the interconnect bureaucracy to actually get approved. So that is a factor as well. And like you said, live by the sword, die by the sword.
All right.
I agree.
Let me just suggest that this discussion could go a lot of direction, a lot of whirlwinds here. We will be in person next week at those in New York on Tuesday, February 25th. And yes, Giovanni, the red carpet will be waiting for you. We will be rolling out by tomorrow, if not today, Survey 19. We're playing with some questions with Bill. So do participate. We want to really get like 200. I'd love to get 361 responses. That would be ideal. Then we have a lot more collective intelligence. And for some want to test out our digital platform, on the allocating side, let us know. I'll
And
leave
then,
it
Mark, for next week, we're gonna do this at 8 on
at 8
Tuesday.
a.m. Correct. So I'll change the counter invite. Hopefully not 15, 20 times, but we'll change it so that you all know, and then that'll be followed by later the conference. So, do you know what the topic's going to be, Stephen?
No, not Russia.
So if you have suggestions for topics, let Stephen know.
I actually saw one this morning that I put aside, so I'm not ready to comment on it yet, but I did see something I thought I might want to talk about.
I'll jinx it.
But
all right.
Actually, Mark, what makes this, it's your 9th year or 10th year doing it, however you want to calculate, but this call is a perfect example of what makes this group. It is the feedback and all the insights shared by the whole, all the different perspectives that everyone brings. It's what makes it work. So congratulations to you on 9 years.
Well,
and also the group for making it happen.
You're a big factor in that too, though, Stephen. So we appreciate you.
Thank you.
And Stephen, thank you very much for doing the Russia presentation. You did a great job.
Thank you.
Appreciate it.
Dangerous ground with all the
I think Stephen should do a India presentation, how to get the best of India right now. And I think Stephen will be very, very good at it. Happy to help.
We could do an improv.
We had that presentation 2 years ago, Mark. As you recall, in January, we were all on board with India taking off 2 years ago at the Naples event, and everyone was all on board. And yet here we are again. Every 2 years, whether we need to or not, we have to focus on India.
Yeah, and now it should be every year, I think, because we don't want to miss the boat.
And Stephen, you could also wrap Russia into that as the biggest buyer, exporter of oil to India. So
yeah. And India obviously buying a lot of military stuff from Russia.
Well, just whatever you do, whenever you do a panel on any country, just Adam's going to throw a Russian angle on it. So.
To be fair, I mean, India is a big place with a lot of growth potential, so it is gonna keep sort of coming up.
No, it always comes up, but the returns on the market have not matched the talk. That's really the issue so far. Right?
Stephen, it's structural. India is not driven by its stock market. It's structural.
Yep. That's
All
right.
right. Well, all thoughts and ideas welcome. Thank you, everyone.
Thank you.
Thank you.
Thank you.
Thank you.
Have a
Thank you,
great
Mark.
day.
Thank you.
Thank you. Wonderful discussion.
Thanks for your contributions.